Welcome to Cambridge House Live. I'm Vanessa Collette at the World Resource Investment Conference. Joining me today is David Morgan with themorganreport.com. Welcome, David. Great to have you here with us.
Thank you.
David, you're speaking later today at 4:30. What is your talk about this time?
It's silver, the move ahead. And I'm going to go over the last bull market and after several items, but one of the primary issues is about how these bull markets run. And we can learn a lot from history. It doesn't mean that the next bull market or the one we're presently in is going to repeat exactly. But if you study the last bull market in silver, what you find was silver went from the official monetary price of $1.29 per ounce up to about $6 from 1965 to 1979. So you had roughly a 14, 15-year time frame where you had silver do rather well, especially during that long period. You're making real money, basis what real true interest rates were. But from 1979 at $6 to January 1980, in a one-year time frame, you had silver go from $6 to $50. So you had an 8-fold increase in a one-year time frame in basically a 15-year bull market. So I've been saying for quite some time that 90% of the move came in the last 10% of the time. And I actually go through the arithmetic during my lecture, which is very easy to do, and prove that really 87.5% of the move came in the last really 7% of the time. Now that doesn't mean, again, that the next bull market is going to repeat, but it does suggest what we know about all markets that go into bubbles. And that is that a great percentage of the move comes in a very short time frame. It happened in the NASDAQ, it happened in Japanese stocks, it happened in real estate. And I expect to happen again in the precious metals. So I think we're far, far, far from the move being over. I also think the big money lies ahead, but it's going to be very difficult unless you're positioned properly, let's say at a time much earlier, to catch that move. Because once they start to move like that, people are afraid to jump in.
So what are you telling investors to do today with their money?
Well, we've been consistent. I've always said that you should have part of your money in the metals or in the commodity sector. I've said as much as 20%. I think that that's a good basis for most people, and basically have a long-term horizon. And it's a site that's devoted to investors primarily, although I do position trading and let people look at my trades from time to time. So I do both, but really the long term is buy right and sit tight, Jesse Livermore saying, and that's pretty much what we teach. Certainly people are upset from, let's say, 2009 till now. The prices have been higher than they are currently, and they're underwater in a lot of these investments, and that's the markets for you. So, but the message is still the same. The bull market is not over. It's got a long ways to go, and you have to be patient.
So are you seeing this as a pullback where people can take advantage of the opportunity?
I am. I thought that we had to pull back far enough in May of last year for the mining equities. And I stated that I thought that was about it, and that we'd probably bottom in the equity market for the mining shares. And I was proven wrong. If you do it on an index basis, it's gone lower. Actually, some of the picks that we have in the Morgan Report have actually held that bottom, which, whatever that means, I guess stronger stocks perhaps, and not all of them. But what it does mean is that these are very valuable because we're in a period where gold stocks versus gold are at about a 30-year low. In other words, there hasn't been this big a discrepancy of what you could spend $1 on and get this much gold in the ground in a resource company for 30 years. So it's obviously a once-in-a-lifetime opportunity. The problem is markets are psychological. Most people don't buy bottoms. I know that for a fact, having been in the markets over 40 years, and from my own personal experience, when I started my website, and it was an inflation-adjusted low. Silver had never been as low on an inflation-adjusted basis ever in monetary history, and people were not buying the bottom. The only people that were buying the bottom were Warren Buffett, Bill Gates, and George Soros, the billionaires. But the millionaires weren't, for the most part. I mean, there's just very, very little interest in the silver market at a low. But once silver went above 10 and went above 15, you got a lot more interest in silver. And when it went from roughly 30 to 48 in a very brief period of time in 2011, there were lots of interest in silver. And I was doing a lot of interviews and warning people, don't put a lot of money in the silver market now. If you have to buy some, but don't buy it all. These type of things tend to correct. And again, I was right, but people didn't listen, or some did, some didn't. Nonetheless, it's been about 2 years since that peak, and I think we got a little longer to wait until we go back into the uptrend.
So do you see more value at the moment in the miners or in the metal?
Right now, the miners are the better value. I mean, I will try to stay consistent. I've always advocated to buy real metal first before you go into the mining shares. But to answer the question, you're getting more value per dollar invested in the mining shares than you are getting in the metal right now.
So are there any companies in the sector right now that are standing out to you?
Well, there's several, but that's how I make my living, and I won't name too many. But we divided into 3 sectors: top tier, mid tier, and speculations. In the mid tier section, there are several companies. There's one that has great cash flow, even at like $1,200 gold and maybe $15 silver. So that's one. It's Allied Nevada. I like that company a great deal. I think it's undervalued. That's a taste of one.
They're still around $7 right now, I think.
On the speculative side, we've got a company that I just put on for our subscribers that's very speculative. It's got $10 million cash, and the market cap is $12 million. So you're buying this speculation roughly for cash value. It's got roughly 100 million ounces of silver equivalent, but on a silver-only basis, which is how I like to evaluate a company, it's over 20 million ounces, which is basically my minimum. I really don't want to be in the space where it's under 20 million ounces, although we follow companies that might have less than that. We don't necessarily recommend them unless they have that threshold.
So what company would that be?
I'm not giving that one out.
Oh, what do investors have to do to find out?
Well, if they buy the report, they'll find out. But
okay.
It's part of the way I make a living. But I give a lot of free information. I mean, I'm on YouTube at the Silver Guru channel. I'm on Twitter at Silver Guru 22. I do interviews like this all the time for free. So I provide a lot of education, a lot of information for no cost to people. But if they want to find out what our stock picks are, generally speaking, that's reserved for members only.
A lot of people are, see the future with where we're going with the economy, and they're afraid. Are you positive about our future as a race?
Well, that's a really important question and a very good question. Yeah, I would say yes, generally speaking. I mean, I think there's some real hardships coming. These fiat money systems never end well. But I am a huge believer in the human spirit. I am also very free market, and I could be labeled, I suppose, a libertarian, although I don't like the label necessarily. I think that when the going gets tough, the tough get going. So there's been times throughout history that people rose to their best under the worst of circumstances. And I'm not saying we're going to the worst of circumstances, but I am looking at the West to have a lower living standard, probably less than they've expected going forward. And yet I actually think that's going to be a blessing in disguise, because I think it's going to, again, bring out the best of people, make them, one, appreciate what they have, two, realize that we really have to work for what we get. And this Ponzi scheme that we've been living under, where you can get something for nothing, because the banks can print money for nothing and charge interest on it, that's coming to an end. So I really am positive longer term, but I think there's going to be, like childbirth, I think there's going to be some pains getting there. But to me, what's more precious than a new human baby? So
right.
That's my analogy. Corny or not, that's what I believe. I think it's going to be tough, but I think long term it's going to be really, really good.
Excellent. Great. Well, it was wonderful to have you here with us today, David, and we look forward to having you back again soon.
Thank you very much, Vanessa.